Hello, everyone. Today is Friday, December 10th, 2021. My name is Evan. Welcome back to our weekly stock market analysis videos. If it's your first time tuning in, thanks for being here. Thanks for joining us. Here's how these videos work. We break up our analysis into two parts. In part one, we look at everything that went on this week in markets, and we go beyond price action. So we look at things like correlations and volatility, the term structure, credit markets, market internals, all the good stuff, and pick apart everything that stands out, looks a little different or interesting. And then in part two, we jump into the charts. We look at those longer term trends, make some sense of price action and overall direction and where we might be going, and try and best position ourselves looking ahead. So hopefully that sounds good to you. Let's dive into this action-packed week. We got an aggressive rebound, and oh my, what a difference a week makes. Here is the S&P 500 closing at fresh all-time highs. Very few, I think, would be willing to take that bet or think about that outcome last week. But here we are with an aggressive market rebound. We saw the VIX drop 12 points back down under 20, but we still have the growth stocks trouble out there. We had many names, still those high sort of PE, high growth names that are still really just struggling or in liquidation mode. So it wasn't all rosy out there, but generally speaking, we got a nice pop here and we've got a lot to talk about. So let's take a look at those numbers. You can see across the board here, large gains. We're looking at that right-hand column, the 1 week numbers. Dow Jones up 4%, S&P 3.77, Nasdaq 4%, Russell lagged on a relative basis, was up 2.37%, and world stocks did well as well, 2.54% to the upside. You can see for the Dow, the SPY, the Nasdaq, we're trying to move back up into positive territory. We are in fact back into positive territory over the past 1 month of performance. If we take a look at market internals, you can see we are starting to try and base out a little bit here, maybe firm up just a little bit. Market internals over the past 2 weeks really, or maybe 3 weeks, really took a nosedive to the downside. We saw really underneath the market hood breadth start to deteriorate late November, mid-November, and it is finally now starting to stabilize. You can see on the week, we've got slightly more new 52-week highs made into the close here on Friday than stocks that made new 52-week lows. So that is, again, mildly constructive. And you can see the AD line here, net on the week, was net positive, net stocks advancing to the upside. If we take a look at our cumulative 52-week highs minus lows over the past 30 days, you can see this was the ski slope down over, again, starting around Thanksgiving is when we really started to kind of wash to the downside. And then you can see this last 5 bars here, this was this week. And you can see we're starting to, again, just kind of catch our breath, stabilize just a little bit. And the big question now that I'm sort of asking myself, that I'm looking at personally as well, is what's next, right? We got the washout. We got this big kind of shot across the bow of volatility, fear, and liquidations. And now that the market has rebounded, this is where almost I would prefer to panic right in here, because now this is where, do we just reset and totally start making new highs, or are we going to enter this more, extreme, volatile, turbulent type of market regime? And, we have the likelihood of rolling back over. That's what I'm trying to figure out throughout this video. And we're going to talk more about that in part 2. If we take a look at sectors here, it was green across the board. Everything worked. Everything bounced. We saw technology at the top of the stack here up 6%. Energy in the second spot, 3.77%. Consumer staples up 3.66%. On the downside, we had utilities, we had communication services, and discretionary. They were trailing on a relative basis, but still up a respectable 2.6% on the week. If we take a look at correlations here, I think the most notable well, there's two things that are notable. One is still we're getting that lockstep of energy correlation here. So if we're looking at the USO ETF, which is tracking the price of crude oil, then you can see that that's very tightly correlated to what equity markets are doing. You can also see the negative inverse correlation to what bonds are doing right now. So essentially this week, we saw interest rates rise. We saw the bond market fall or sell off and essentially moved totally inverse to what the market is doing, what equities are doing at this time. If we take a look at volatility here, it is again just this big unwind of fear after this week's worth of trading. We were up at 30 plus going into the weekend last week, and we're basically in backwardation. I think we technically we're in backwardation. I know I pull this data, beside the point. I mean, it's the data here is maybe slightly different than looking at the specific futures term structure, but generally speaking, this gives us a good indication of just what the term structure looks like. So it's not precise, but again, it gives us that good baseline. But you can see this week here, the blue line, we've dropped dramatically. We're down in the 18s, so back into the teens, and you can see a much more normal sort of slope here in which volatility is priced out into the future. So that is a good thing. It is good to see that back into, kind of healthy sort of structure. If we take a look at interest rates and credit here, again, we talked about the yields were popping this week. So we saw the bond market really kind of selling off a little bit as people sort of rotated back into risk assets. Maybe the bond market or, credit markets here trying to lead what the Fed or what it wants the Fed to do here on trying to get those interest rates back to the upside to start raising them. Obviously, we had CPI inflation. We didn't talk about that at the beginning of the video, but we had those readings out, and all focus is on what the Fed should be doing and whether or not we are going to spiral out of control here in terms of inflation, or if we're peaking, right? And there's two camps, good arguments on both cases, and that goes a little bit beyond my pay grade. I'm just here to report the numbers, and you can see again, that's what happened in terms of credit markets and yield. You can see investment grade bonds, high yield bonds, pretty mixed picture here. Going to keep an eye on this, on how the LQD JNK ETFs develop. If we take a look at dollar and commodities here, mostly red. Dollar index didn't do a whole lot, just pretty much chopped around, went down slightly. Same thing with gold. Silver was down a bit. Bitcoin down a bit. Agriculture down a bit. Crude oil was what had the rebound. But remember, crude oil got hit pretty hard here over the past 3 weeks. So it got that nice recovery bounce along with equity markets. And again, we'll see how that fares going into next week. Natural gas still struggling in recent trading days and really, frankly, this past month. So if we put it all together, we take a look at the report card. We had a mixed picture here, a bunch of check marks, so that was good. We got a solid B in terms of performance. Still have some volatility issues there, just with the VIX still staying pretty elevated. We're going to keep a close eye on that. Credit markets, again, going to keep a close eye on that as well. Now, if we take a look at our two trading systems here, definitely some movement, definitely some rotation happening amongst the positioning that we run here at Trade Risk. So our top trading system pretty much holding the most amount of cash we have been all year long. So we're about 60% invested right now, 40% of dry powder here. And that's, again, pretty much the biggest safety positioning that we've seen in this trading system. And again, this is looking out basically, call it a month and a half, 5-6 weeks of distance into the future. That's how it's trying to position. And so it's essentially taking it all in right now and, de-risking a bit. If we take a look at our short-term system, you can see we're actually net short right now going into the weekend. And so it built up a little bit of a short exposure here throughout, frankly, after the rebound on Tuesday, it started to look more on the short side of this market. So, what I do is I essentially allocate 50% into both of these trading systems. And so when I put these two together, I'm basically, marginally long the market right now, but pretty defensive, all things considered. So definitely some adjustments here. Again, both these trading systems are active. Things are happening throughout the week, so I don't necessarily encourage any of you to try and mimic this. These are all holding specific stocks and have lots of more the developments, interesting things going on under these just allocation reports. So just keep that in mind. If you do want to learn more, or if you want to join up on these trading systems, we generate reports every night, spits out trade ideas or trade setups for the next trading session. And these are totally portfolio driven approaches. So if you want to check that out, there's a link appearing in the top right of your screen right now. Otherwise, we'll be back with part 2 in just a moment. Okay, we are back. We've got TC 2000 open. We're looking at our equity market grid. Got the S&P in the top left, Nasdaq top right, Russell in the bottom left, and international stocks in the bottom right. We've got our custom smart trend filter applied here. So this is the multicolored dot indicator, measures price volume across time, and it helps us measure trend strength, gives us that path of least resistance and sort of bias to follow in the market. And we're starting with a weekly time frame. So if you recall, last week is when we had most of these markets transitioning down into our yellow neutral state here on the long-term time frame. ACWX here in Russell 2000, they technically were transitioned 2 weeks ago. But if we look here at this week's action, we obviously held exactly where we needed to in most of these markets, really actually the top 2 markets. So S&P and Nasdaq, you can see we basically came back down and tagged our little indicator here and bounced off of it. And so we're still in the neutral state. And what we're looking for now is just to see if we can get a green print here next week, if we can see that commitment and the strength continue here to support this longer trend that the S&P and the Nasdaq has been in. If we take a look in the bottom left, the Russell 2000, again, we're still in the neutral state, but notice the positioning here. We are below our smart trend filter. So that to me is more pessimistic. It does suggest that we in fact are more to leaning down to producing a sell signal in the Russell. It hasn't happened yet. And again, we'll be keeping an eye out for that next week. We haven't seen a sell signal here in the Russell all year long. So notice going this whole year, it's basically been in this choppy mess, and it's just been yellow dots, almost relentlessly printed, just a couple of greens sprinkled in as the market tries to break out and then ultimately has failed and goes back into this range. So we are, eagerly sort of awaiting to see how things shake out here into the end of the year. For now, we're back to this comfortable yellow state for the Russell. Same thing for the international stocks. You can see yellow dot printed here as well. Now let's go down to the daily chart. This is where things are a little more noisy. This is more short term. This is probably where, more of the active traders are living and looking at. You can see here for the S&P 500, we essentially got our green print on Wednesday. So we got our fresh buy signal on the S&P 500 this Wednesday. And you can see prices pretty much continued higher into the weekend. We obviously pulled back on Thursday, but we stayed above our indicator here, and life looks good for the S&P 500, again closing at highs. Notice the Nasdaq hasn't quite turned up, so this is still, jury's still kind of out here. It's still in this transition mode. The prior signals, the sell signals, so we got to be a little bit cautious here in the Nasdaq 100. I'm more pessimistic in this market than I am the S&P 500, and then of course the Russell 2000 still looks the worst on a relative basis. You can see here we are back to this yellow state of indication, but we are still below even the daily trend filter here. So we want to be most cautious in the Russell, slightly more optimistic in the Nasdaq, but still, kind of treading carefully. And then the S&P 500, just clear relative strength performer. International stocks, I should note, though, did start to, hold up and actually perform here into the end of the week. So they turned up, got a green buy signal there on Wednesday for ACWX. Now, given our trend sort of outlook there, let's take a look at some price action. Let's go a little bit tighter here on what's been going on. So let's start with the S&P 500. So S&P 500, again, we have been sort of looking at this roadmap here. We talked about a few different levels, and one of the levels that we talked about was really on like this weekly time frame. I want to start here just to kind of clean things up. We really wanted to see the S&P 500 hold above the September highs here, and it did on a weekly basis. I mean, it closed right at this level last week on the 3rd. We talked about that right around this 45 call it 40 area, 45 area, and it closed right at those September highs. Now it did of course have this dip intra-week and we did undercut, but generally speaking, we held those September highs and then we came aggressively bouncing back this week here, up 3.82%, closing at new highs. So again, if we zoom out here, we just take a very sort of innocent look at just price action. You can see that we essentially came back down. We retested the old breakout level. Buyers showed up, should be up here. Buyers showed up to this area and then launched us back up to those highs. That is a very constructive, bullish development here for the S&P 500, objectively looking at that price action. Now, a couple of other things to note is, first off, we've got this sort of gap and go session, which was Tuesday. That's where all of the urgency and strength really set in. This was a big day for the market, especially in the Nasdaq tech side of things. It was one of the biggest days we've seen in all this year. And so this gap is still open. This is what I'd pay attention to. I think on the downside now, you can just reference this area, Tuesday's lows. I mean, if we're staying above here, if this gap stays open and price is trading comfortably above Tuesday's lows, I mean, that's a good, that's a good short-term sign for the market. If you want to go a little bit tighter on recent action, you can clearly just kind of think about Thursday's lows as your line in the sand, because that's where the market started to kind of dip back over, looked like it wanted to roll over a little bit into the weekend. And then again, that magical bid, buyers kind of stepped up and, price just ignited and closed strong into the weekend. So 46.67, let's call it, that general zone here, Thursday's lows. Those are kind of the two areas I'd just be paying attention to for you shorter term traders, and see how that gap holds up, see how Thursday's lows holds up, and that's what I'd be paying attention to. On the more intermediate side, it just goes right back to the same reference point. So exactly where we held here, around 4,500 or so, or actually on that weekly basis, I should say. 4,500 all the way up to about 4,550 or so. That's where I want to see the market hold on that more intermediate term basis. Think the weekly chart on our trend filter. That's kind of where this reading would essentially come back in. And if we start to roll over below here, you can just see from a trend perspective, that's going to start violating the longer term trajectory. So that's, I think, the easy way to think about it. I also think if we just use our simple support and resistance indicator here, you can see that, again, this is where we talked about this on Wednesday. So I think everything stands there from price levels that we just talked about for the S&P 500. Let's pay attention to these. Now let's think about to the upside. If we put this indicator on here, this objectively shows that the S&P 500 now is coming right back into resistance. Yes, it closed at all-time highs. It's still in this zone though. So again, I don't necessarily give it full confirmation. Okay, we're just going to sail higher here. I still think now that the S&P 500 has now bounced 5%, right? I made the comment earlier that I rather be panicking here than, last week at these lows. In other words, I don't want to necessarily be a seller here, but I would be a more interested seller up here, or at least just taking notice of what's going on now that the S&P is back to these highs. Same thing goes for the Nasdaq 100. So notice the Nasdaq 100 didn't quite get the new close high. If we throw like the support and resistance area on here, you can see we're coming back into these just red aligned dots here, which basically just represent where prices have failed in the past. And so we've seen a nice bounce off of the lows. We saw that breadth sort of deterioration we talked about. We know that the 52-week highs minus lows, that's still a little bit weak right now. And, generally speaking, we haven't quite broke out in some of these other markets. So I want to be a bit cautious here. You saw it reflected in the trading systems that we have. They're a little bit more cushioned right now. And if we start to break out here and we start to just get more commitment, and over time here we work ourselves higher, then I think it makes total sense to jump more aggressively into the long side of this market. But I just want to be a little bit cautious here. And so again, same thing with the gap on the Wednesday session, or Tuesday session rather. You can see that this is open. Let's pay attention to that. Let's use that as our line in the sand here for the cues. If we start to break down below and fill this gap and roll back over, then you got to be a little bit more cautious. Otherwise, let's pay attention to last Friday's lows. That's kind of the way I'm framing out this market. If I look at the Russell 2000, you can see the Russell 2000 here is just really back into this old range. So we, again, we looked at this chart last week. You know, we said, okay, markets are oversold. The FIX is up 100% in 2 weeks worth of trading. We're coming back into these big demand areas where prices have been slamming into in the past. We noted the heavy volume, which usually occurs at turning points. And all of this suggesting that in the short term, we could get a bounce. We got our bounce this week. Right? Everybody, all these markets bounced, several percent off of the lows at minimum. And now is the time where we have to reassess. And now is the time where we think about whether or not this can actually hold or if we're going to just roll right back over. So again, Russell here on a relative basis, my least favorite market. Remember, I had this position. I played for this breakout, ended up taking, I think it ended up being a small loss on this trade. Regardless, no longer have the position. I'd want to see, again, this gap really filled in here, which it never could. So this sort of downside gap never got filled. And you can see, of course, that's coming right back up to the upper end of this range. So for me, Russell penalty box doesn't necessarily mean it has to break down, just simply means I want to see more time develop and pass in the Russell. So that's the read there on the market. Hopefully that's helpful, some different levels, some different thoughts. Let's look at some other of these markets. We talked about the VIX. I like the VIX back down under 20. Definitely much better and preferred than VIX up at 30. But again, we did fall quite a bit here. So let's see again how this shakes out next week. I want to see the VIX, stabilize down here in the teens and not just jump right back up north of 20. Gold we haven't looked at in a while, and I think gold is starting to get more interesting here, maybe from the long side. It's been moving sideways, it's been chopping around, it's been digesting depending on what time frame you're looking at. This is the monthly view of gold. You can see it's just tightening up here around this 160, mid 160s to low 170s. So I'm paying attention to this. I think it's a little more interesting here as it stabilizes. I'd like to see it prove itself, and it probably needs some more time, but it's just starting to get on my radar once again after really I have not paid any attention to gold here in quite some time. We can also look at the dollar, which again is consolidating. Hasn't quite rolled over, but it is just kind of hanging out here. So I think it's ready to move pretty soon. You can see it's been back up, trading just under its year-to-date highs. And we'll see if this turns into a continuation pattern or if this just rolls over. This obviously will affect lots of other markets. Last but not least is TLT. You can see this giving some back. We talked about the move up here last week, and it very quickly now gave it back. So that's a little disappointing to see for you bond bulls. I think you want to see this back over 151. Could look at the shorter end is maybe, hanging in there a little bit better if we're looking at like 10-year duration. But generally speaking here, bonds still just got to prove themselves a bit more. So that's it. That's what I have on major markets and thoughts and analysis. Let's take a quick peek here at some of the sectors, industries that were working this week. There were lots on the bull side because, of course, we had just that romping, stomping March higher. You can see if we run down this list real quick, we got information tech, consumer electronics, communication equipment, health plans breaking to new highs, household and personal products, tobacco. Trying to put in some type of low here. Look at the volume that's come in on the tobacco side over the past 3 weeks. Building materials breaking out to new highs, utilities, new highs, ag inputs, new highs. If we look at XLK, just outright new highs, and we look at utilities, regulated gas, XLP staples breaking out to new highs, home improvement stores, trend continues. This really never even pulled back or gave any gains back recently. We have XLV, so healthcare breaking to new multi-month highs. Same thing with defense sector here, confectioners. And last but not least, industrial distribution. Oh no, two more. Industrial distribution, real estate, and wood production. Lumber back to new highs. On the downside, one sector, one industry that is notably bearish here this week was recreational vehicles, closed at the lows. Pretty low volume, but still, definitely not performing like the rest of the market did. So that's it. That's what I have for this week. Hopefully these videos are helpful, keeping you sane pain during volatile market environments. Let me know your thoughts below. Leave a comment. Always love to know what everybody's looking at and what you're paying attention to over the weekend. We've only got 2.5 weeks left in this trading year, so make them count. Hopefully, again, you guys and gals are having a good year and managing here into the end. So that's it for me. If you enjoy these videos, be sure to subscribe to our YouTube channel, and you can always catch these videos on our website, thetraderisk.com. Have a great weekend, and we'll see you back here next week.